Do you ever golf at Torrey Pines, Jeff?
Yeah, I do. Torrey is its own experience. It's a little that Bethpage Black where you're just going to fuck you for 6 hours and see how much you enjoy that. Do you love golf? Do you break 80 usually? Well, you're going to shoot 96 and it's going to take you 5.5 hours.
All right, everybody, welcome back to another episode of the Off the Charts podcast. I'm your co-host, Sean McLaughlin. He's Steve Straza. Steve, how you doing, buddy?
I'm good, man. How are you? We haven't done one of these shows in a couple weeks.
Yeah, and I'm excited about today's guest. He's kind of going to be doing some stuff with us going forward. He's going to be our retail guy. The Retail Roundup, I believe, is the new product we're going to be launching. And Jeff Macke is no stranger to the retail space.
Yeah.
Straza, tell me how you first became aware of Jeff Macke.
I've been following Jeff's work for the longest time. Would read him back when he was on Yahoo Finance. Jeff is really he's a special kind of analyst because he sticks to what he knows and he's the best in the business at retail. So it's really exciting to, bring him in. Now we're working with him at All Star Charts and Stock Market TV. And it's like we have our own in-house retail specialist. The combo will be interesting. I
became aware of Jeff, I started trading in the late 90s, as you know, and he was a regular on financial TV. And so I got to know him just, as someone who was regularly on TV. And then, later on, he got involved in social media with the Twitter and the blogs and whatnot. And there's nobody who does charts and visuals the way Jeff Macke does. I mean, you've seen some of the stuff he does, right? It's unbelievable.
We'll have to throw some up in the post-production so that people could see what we're talking about. They're very unique. You know a chart came from Jeff Macke when you see it.
Right.
For sure.
I mean,
we're gonna talk to him about that.
We've all heard the phrase that a picture is worth 1,000 words, and I think Jeff embodies that tremendously. And I just can't wait to see all the new stuff he's going to come up with us. It's going to be a lot of fun.
Howard Lindzen always called it like chart art. I think Jeff is the epitome of that.
Jeff is chart art. Absolutely. All right. Enough talking about Jeff. Let's bring Jeff up. Jeff Macke, welcome to the show. So glad you're here, buddy. How you doing?
I'm doing well, guys. It's good to see you. Thank you for the kind words. It's always crazy. It's been a little bit of a journey over the last 30 odd years of kind of talking about stocks on television and print and Motley Fool and the street.com. Holy crap. You don't intend to become a fossil once you're setting out in the world, but one day you wake up and there you are, an angry man yelling at a cloud.
Well, before we went live, we were talking about how you are originally from Minnesota, but now you live in San Diego. And, it's 50s today in San Diego, and you were complaining it's a little cold, a little windy. And, we were all kind of laughing, me being from Buffalo, you being from Minnesota, like, man, how did we get so soft as we got older?
So soft. I hit a 3-iron stinger today and I was bitching about my fingers. You're looking down. It's like, God, that really hurt. I suppose it was better than sitting in my house on the couch watching it be 4 degrees for the next 6 months. But still, that windy 3-iron stinger wasn't quite what I was looking for. Now, it's very nice to live someplace where I can get outside. I'm looking to my left. It's the Pacific Ocean, and I'm happy that it's a little dark, it's a little cold and ominous, but that's just fine because it's the Pacific freaking ocean. It's good.
How often do you do something like that? Just kind of get away from the screen, say I need to just get outside, get out of my office for a day.
More often than I used to, and probably not as often as I should. There's a tendency. I've gone through some personal stuff. It's not my first rodeo. I've been through a lot of stuff. Some of it public, most of it not. Which is, I think, kind of the ratio that everyone goes through. And the stuff underneath the surface is always a little more action packed. But sometimes you need to kind of get out. Today you're just kind of grinding trades, right? I'm looking at the consumer spaces. It's like they're kicking the crap out of the shoe space. Crocs reports tomorrow. I can sit there and grind on that and worry about that all day. There's probably not a ton of awesome trades there.
Right.
And it's a really good time for me just kind of personally to kind of get out and spend an hour just smashing golf balls and just see where they go and doing whatever kind of your zen is. A lot of people get it from running. I bike a lot. I cycle a lot. it's all kind of the same animal. It's like, let's just go do something that I can just crawl into my breathing and let's just push it and think about something other than, the imponderables and why sometimes you get struck by lightning, even though you try to be a good person.
Right.
Golf is good. It forces you. You're just out there meditating for like 4 hours, and there's nothing you could do about it.
Right. And it's its own punishment. I love stuff. And I've spent a lot of time kind of coaching kids. I coach my own kids and athletically. Things that if you have the right mindset and you approach it right, you get the best results. And that's working with young athletes. You can always teach a kid like how to ski. You can teach them how to exercise. For a fact, if you take a good 15-year-old and you're like, if you just run for 3 weeks, you're going to be a better runner in 3 weeks. That's all it's going to take. Golf is all about the feedback. It's like, man, if you're gripping the shit out of your club and you're thinking all kinds of negative thoughts, I guarantee you're going to hit crap. I'm not sure where it's going to go, but neither are you. That's kind of the point. Like, you got to take a loose grip, you got to chill, and you got to focus on the shot. And that's a really good metaphor for life. It's an exceptional metaphor sport.
And the market. I mean, because in golf, you're your own worst enemy. It's all mental. So I think there's a strong corollary.
Yep. Oh, absolutely. Absolutely. And wherever you find your zen, it doesn't matter kind of what your personal thing is, but I took up golf again after 25 odd years. I played, almost daily in my late 20s and then kind of just put it down, walked away, and teaching myself to do that again over the last couple of years. It's super not satisfying to go from being a decent golfer to like, holy crap, I'm not positive I broke 100 today if I kept a strict score. But the process of kind of relearning the swing, relearning the new gear and stuff has been incredibly therapeutic. It really is. I couldn't be a bigger fan.
That's interesting that you took such a long hiatus and then came back to it. I can't imagine how frustrated you must get when you're not playing well because you're benching yourself to your golfer as 20 years ago.
Right. And the gear helps you lie to yourself a little bit. That's the upside of that is that, the equipment, it's hard to notice the year to year, boy, I need a new driver because it's been 6 months and I'm sure they redefined driver technology. That's bogus. But if you wait 20 odd years, man, the stuff goes a lot further today. It's just like, I'm a much more powerful man than I was in my 30s.
All right, well, that's the excuse I'm going to use then, because my clubs are pretty old. So I'm just going to blame it on my clubs. That's why my scores aren't also great.
It could be a thing.
Magic sauce.
The technology has come a long way. Whenever I'm not hitting a club well, it's definitely because it's too old.
Yeah, for sure. And maybe if you would have, spent $50 more, there's a nicer club and a better swing, more happiness right there for waiting for you.
All right, so Jeff, you are a little bit different than the guests we typically have on this episode, on this show. We typically interview active traders, people who are in the market making trades on a daily basis, or certainly multi trades a week. You are a little bit more of an investor and you're an analyst. And what I like about you, what I find very interesting about you is when we interview other traders and people involved in markets, they're generalists, right? They'll trade anything. They'll trade any stock. They'll trade any crypto. If it's moving, they're trading it. But you have a lane that you have focused on, that you've become an expert in, and there is nobody who does it better. So let's talk about retail and consumer stocks. This is your bread and butter. Tell us what it is about that space. What is your approach to investing in that space, and what might be unique that others can't relate to in other areas of the market?
I think there's my story and there's sort of how I apply it. The latter is something I think people can take away from. Everyone has their own kind of personal experience, and mine was, my dad was a Target exec. And that's what he was in his bones. And so that's kind of how we grew up, and we would visit stores, and that's just sort of, it was always about kind of the gestalt of a store. You walk in, how's that line feel? You want a little chaos. You don't want the store to be empty, right? It should be a little bit of a hassle to park, but not too much of a hassle. You want a few people at the line, but not too many. There's a balance and a line and just kind of a field that you work with. And that's how I grew up. That became my strength. And so I sort of worked backwards with my investing process from, okay, let's layer on top of that some of the fundamentals, some of the analyticals. And so I'm watching trends all the time. I'm thinking visually and experiencing life that way, and going out into the field and looking for trends that I can identify and then figure out how to make money from it. And that can be it's we're watching live boxing on Netflix. The entire country's watching it. We're actually talking about boxing. I've been a boxing fan my whole life. That's tradable, man. If 100 million people are watching some preliminary fight on a Mike Tyson bout with Jake Paul, and they're all talking about it, there's got to be money there. It turns out not to be Netflix. It's a bunch of different companies. But if you can work it backwards, if I notice trends, if I see experiences and kind of how people are going through life, there's always a way to profit on it. And so it's a little bit of it's kind of a modified Peter Lynch, if you will. I don't know if people are even familiar with that book anymore, but Peter Lynch was a great mutual fund manager who was always about the experience, always about working backwards from I went into a store and it's packed. Now that either means that they're going out of business and they're selling everything below cost. And so it's just it's a dumpster fire, or they're onto something a little more magical, like it's a Costco situation. And maybe this is the investment of a lifetime, but let's dig into it. And so I think from my personal background was growing up with that emotive and kind of sensing, sensory experience of the way I look at life and the world, and kind of, what my natural aptitude is. And then kind of layering on top of that, the things you can actually learn in school. And okay, this is what it looks like. The cash flows look like. I was in Target today trying to buy electronics. Okay, what do the cash flows look like now that it takes someone 20 minutes to go get the AirPods that I want to buy, as opposed to before when they could just leave them out on the shelf because people wouldn't steal them like crazy? That changes the entire customer experience in a monetizable way. You can trade that, you can invest it. And so that's kind of my process, is working backwards from the feels to the numbers.
Jeff, how old were you when your dad started bringing you to the stores and basically giving you a crash course in retail?
Way too young. Right? I think that was kind of, my dad was a boomer, man. That's the way boomers parented. Like, we're going to throw you in the back of the station wagon. I'm going to spend time with the kid. Like, you want me to be a dad? I'm going to be a dad. What I'm going to do is shop 8 stores in the Minneapolis metro area this morning, and I'll take the kid with me and we'll see how that goes. So literally my earliest memories are walking through Target stores, experiencing my dad's, just the vicarious kind of fear that you would have from, my dad was pissed because the displays looked like crap and the end caps weren't properly stocked, and some store manager was going to take a beating that day. From that to sort of the glories of, holy cow, the store looks great. He would pound guys in public, but he would write a little note if they did well. He would say, I heard something good about you, with his I'm the psychotic, vice president of the chain that would eventually, he became CEO when he was 44 of what, is now Target. It was Dayton Hudson at the time. So he was kind of a hard driving dude. And, that's just the way he managed, man. It was something to see and experience.
I'm fascinated by this story of you going there as a kid. You just spurred a whole lot of questions. One of the things you said there was you guys actually paid attention to how many cars are in the parking lot and how long are the lines. Like, I find that really interesting. Like, you don't want customers to have to wait too long to check out, but there probably is some psychological piece for customers to see a little bit of a line to know that, hey, there's good business happening here.
Well, it's like a super negative vibe to have a cashier standing there talking to nobody, right? That's a store you don't want to be at. You want some energy at Target.
You don't eat at an empty restaurant either. Same thing, right?
Exactly. You can walk in and be like, boy, they'll give me great service. And, it's probably because they gave norovirus to the people that came in last week or something. Like, the damn place is empty. I mean, it's one little crowd, and it varies by the season. My best memories are the Christmas time shopping, because he would always want there to have to be cops directing traffic in the parking lot. If there weren't cops, Ken would be just a little bit pissed off that there weren't cops there, because you want just a tiny bit of chaos, a tiny bit of
that's great.
That sort of fall of Saigon. Holy crap, they're out of the GI Joes with the kung fu grip, and I better get in there and get mine. Otherwise, I'm just a bad parent. You just say whisper of it. Just you don't want that to be the whole energy, but the little wasn't so bad. And YouTube made the doorbuster go away, because that turns out that people getting stampeded is a rough visual for a store. But, that type of kind of big game, it's we're all here and we're going to shop and we're going to create a little bit of emotional bidding war stuff. That is a fun way to shop as far as I'm concerned, but it also makes a lot of money. And that's also a really good way to run a store.
No, that's amazing. I have my son's 10 years old. He plays sports. And so I frequently find myself going to the local Dick's Sporting Goods to buy, a
Sure.
basketball or a baseball mitt or something. And every time I go in there, I'm pretty sure I'm the only customer in there. And I kind of like that. I'm like, great, I got the whole store to myself. But from your point of view, that's probably not good optics for Dick's Sporting Goods.
But I'm my reference point there is a different age of shopping. Like I said, you can't have the doorbusters anymore because YouTube ruined those. Like, the guys would wait out line, and, right? You'd have, oh, we've got 3 Xboxes here, and the Best Buy opens at 7:30, so people would line up hours and hours and hours in advance and just do that stampede thing. That doesn't look good on YouTube today. With infinite ways to buy things offline and offline, online, omni-channel. I love Dick's. I love the vibe there in terms of just in terms of how that business works, where you go in, you can feel the stuff, you can try on, choose. Okay. That'll always have a place in the universe. Everybody, if you have kids and you're raising them, what you really don't want to do is buy their shoes online and they don't fit or they don't look right or they're not the thing. Like, you want to go in there and touch the bats, field the baseballs, look around and see what the shoes they have going on. I go to Dick's, honestly, probably like a couple times a week just because we've got one near us. And that's a great place to vibe customers and how they're feeling. You're right. The stores aren't as busy as they used to be, but that's because, I am famously a Peloton enthusiast. I finally bought a new bike. I'm a little tough on the bikes, I'll be honest. But I bought a new one, and did the curbside delivery. It's insane how great that is, that you can just buy stuff online and go pick it up anymore. So that reduces sort of that store traffic. But what you like about them is what I like about them too, which is you can go in, you can see all this stuff, you can pick it up, it's going to fit because you got your kid with you. And all of a sudden that turns into a little father-son outing. All of a sudden you're doing stuff with your kids.
Yep. And I think they're trying to bring more people into the stores. At least in Miami, they have one called Dick's House of Sport now. And it's like a Chelsea Pierce. It's huge, super cool. I don't know if it knows in other places too.
They one of the reasons they're doing that, they bought Golf Galaxy. Yep. Kind of, they were a little early on that one. That was in the wake of Tiger Woods, when it's like, what if everyone in the world golfed? Golf is not that kind of sport. You don't want everyone in the world to golf, and it's not going to ever happen. But they wrote it down to 0, and now it's kind of building as a business. As screwed up as the PGA is, as bad as the ratings are, the fact is that if you get your clubs fitted, that's better. And man, that works so well for Dick's because they really were early in that. You used to be able to go into Dick's Sporting Goods and use the archery range, and now they have batting cages to this day. They got rid of the archery ranges for reasons that are, culturally significant, but that's a whole different sidebar. It's like, should we let people use weapons in the store? Probably not. As it turns out, maybe that's outlived its cultural usefulness as an idea. But you can still let them swing a baseball bat at a ball anyway. And you can also let them try out golf stuff. And that's a huge hack, as it turns out, for the sport. If you can actually fit clubs and let people hit them in a simulator, you're going to move a lot of golf product. And so now golf makes a ton of money for Dick's Sporting Goods, and they've written it down to 0. So that's something about pure profits. I've been long Dick's for years. It's a great company.
Jeff, is going to retail stores and touching the products, seeing the layout, getting a vibe for the customer experience, is that a core part of how you do research and come up with ideas?
It is, Sean, but that's the kind of thing that you say it is, and then people pick it apart because you can't go to every store. There are 5,000 Target stores. Right. I go to 3, and so that makes me pretty OCD in terms of actually visiting stores and doing it myself, and that leaves 4,997 stores that I haven't seen yet. So you can't draw your sweeping conclusions, but what you can see, for instance, on the Black Friday, the day after Thanksgiving, biggest day of the year. That we used to do that for years as a family. I would take my kids there just because that's obviously the weird way I was raised, and so I did it to my kids too. But you pick the good stuff your parents do. I like going to stores with my dad, so I inflicted that on my kids, just try to eliminate the bad. But it's what you would see there is not so much these sweeping conclusions you can make, because a bad store manager, a bad staff, there's a lot of different reasons that you can have a good or bad experience in the store. But what you're looking for is that's what the chain is trying to do. When my old man was at Target, one of the things they invented was the planogram, which is basically just a map of, this is where we're going to put everything in the store. So you took the decisions out of the hands of the local managers who just had a knack for it, and you made it an official. It's if you go to a Target, it's called the racetrack. You start on the right. There's women's wear on your right hand side. You work to the back. You have menswear. You take a left, and you're going to end up in electronics because that's just kind of the way it likes to flow. You got sporting goods to the left of your electronics because they're kind of both high end, expensive stuff, and you move around. I can do that in my head. That's the way every Target should look. It should be well stocked. It should be clean. Customers respect that. My dad, again, I was a little early to hear it, but he would always say, a dirty store is an FU to the customer. And guys in the 70s didn't use the abbreviation for F. It was just like, Jeff, you're 7 now, so you should know a dirty store is a fuck you to the customer. And that's a thing that we're just not going to do in this family. Tell your second grade class, I don't care. That's just not how our family rolls. And if people are going to make a dirty store, they can just go to hell. It was that was a thing, and it turns out that Target was for a time very successful, just offering slightly nicer stores than you would expect at discount prices. That's the entire vibe. And so what I'm looking for from a store is okay, what are they trying to do with this concept? What is Dick's trying to do? Well, they want me to be able to handle the merchandise a little bit, pick up the golf club, give it a couple of swings. They know that's the advantage they have over a straight Amazon environment is most people, when the internet shopping first started, the idea was, people are just going to try things out in the store and then go buy it online. Not really. If I want to get a golf club, if I'm into Sporting Goods, I hit it 3 times in the simulator. I'm not going to screw that company so I can go save $10 and buy it online and get it shipped to me in 3 weeks. I'm going to buy it there. And so I know that they're trying to give me the experience. They're trying to sell me sort of the entire vibe of sports, that house of sports, that entire kind of feel of I've got a healthy, happy kids and family, and I'm in shape. And they're trying to execute that and promote it at every level. So I can see when you go into the stores, are they doing that? Is it delivering? You go into a Foot Locker, you never walk into a really good one because the concept is bad. The future of athletic shoes is not spending $500 to buy it from a guy in a ref's jersey. It's just not. So
I can't remember the last time I've been in a Foot Locker.
For exactly that reason. It's just a weird vibe.
Yeah. So your edge is in spotting these trends that eventually, flow through and affect the performance of the companies that you're watching. Does this dictate a particular time frame for you as an investor? Like, I'm hearing all of these things. I'm saying that's awesome, but do you have to kind of zoom out and wait for the market to kind of recognize what you're onto sometimes? Do you need a longer time frame for this?
For sure. And how long you're willing to spend depends on the opportunity. Lululemon was one of my favorite investments ever. And it was largely because they made pants for men that weren't just horrible, it's men's pants. Your choices for decades were denim or wool. But that was 15 years ago. You had wool pants. Started, you're in Florida. Wool pants are just, my God, I'm going to steam rice in my pockets. That's just insane. So I'm going to make a little rice peel off in my slacks. So I'm along this Lululemon, and they're known as this tight company. And I was living on the East Coast at the time. And so, guys just had all these pejorative, like, you look a little swishy in those pants. And it's like, no, they're much more comfortable. Like, they breathe. I'm not being incarcerated testicularly by my trousers. And I'm telling you, this is going to be a big deal someday. Like, it's other men will enjoy this because previously our choices were either a kilt or we would just entomb ourselves in denim.
I own a few pairs of Lululemon pants. I'm a fan.
But athleisure is now just clothing, right? Yeah. Like it just went from this weird thing that was like, I don't want to look like David Lee Roth or the Scorpions lead singer in these tight, weird athletic pants. But it's like, no, it's not like that. It's for more than ballet dancers. It's for just guys who don't want to be really super uncomfortable all day at work. That was an investment that took years to work. It took so long just for kind of people to accept that was going to be a men's business. But once Lulu figured it out, that stock went from $40 to 300 something. And it was not a straight shot, but man, they went there. And that because now they sell about $4 billion of pants.
And that was entering basically the men's world. That's what sent the stock soaring years back.
Oh yeah. It would,
moving away from just yoga pants.
Sure, just moving away. Just they expanded it. You see companies make the leap. On it's that's one of the companies for the new product. I picked a starting 10, just 10 companies I think people should own all year. One of them is it's On Holdings. The ticker's on. People never call it the right name, but it's basically because they named it On, which is silly. But what they've done, it's another brand that's made the leap. We saw it years ago at kind of more trendy upscale type of athletic places as among the women. It was huge with my wife. She's like, all my friends are wearing these shoes. Then all of a sudden the men are wearing them. The real light bulb point was all of a sudden my teenage son wants to run in the shoes. Now he's a snob. He's a D1 athlete, so he's not going to wear crap, and he's going to be really kind of opinionated about what shoes are what. They're On is kind of penetrating that market. Now all of a sudden you're not just selling kind of stuff to the high end Rancho, Santa Fe type of demographic, but you're selling to all the kids. And a lot of kids are buying shoes. They're taking over space at Dick's Sporting Goods. You'll see them there, Sean, if you go. All of a sudden, On is now part of that operation. That's a huge deal. That expands their market enormously, and that stock has responded accordingly. And so you have something that they're taking off. When you can see that penetration expand from a traditional super niche market to something that just everyone likes and has, it's a huge leverable play in a consumer field.
Are some of these trends secular? When you find an opportunity like this, is it it's not just one cycle? This is stuff that's investable for decades.
Yeah, it comes and goes a lot. You get a lot of cycles, but within that, you also, especially retail, is where love goes to die. They once they get super hot, that can't last forever. And so that happened with Lulu. They're just digesting. It's not a terrible stock. It's not a terrible company. It's a fantastic, both of those things, but it is not in the ages. They aren't going to discover a new group of people to sell pants to. They got men and they got women, and and they actually are expanding into kids. But the pickings are a little slim there. Once you're selling clothes to everybody, it's hard to kind of come up with 25% growth year after year.
Yeah, it's kind of a tough business to be in, because if you're not Target or Costco or Home Depot or one of like the mega big box operators, these trends come and go. Gap is popular, and then 10 years go by and it's not popular, and it gets popular again. I don't know.
But Straz, that's kind of why it's a tough sector, but that's where the alpha is, right? That's kind of where the advantage is. And the trends come and go, but when you look at the big fortunes in American history, they've kind of been a lot of retailers involved with that. You had the Sears people, everyone involved with that made just absolute bank decades ago. And then, of course, the Walton family is one of the most powerful families in the country and have been for decades. And now Bezos has taken over. Those are all retailers. Those are all guys that have figured out a way to take this kind of not very glamorous 6% margin industry and turn it into billions and billions of dollars in generational wealth. So that to me is a sector worth looking into. No one likes it because they don't think there's winners there. There are tremendous winners there. The consumer is about 70% of the entire economy of the greatest country, and economically speaking, in the world. American consumers consume. We buy shit. We comfort shop. We shop when we're happy. We shop when we're sad. That's just how we roll. And so there's good times and bad times, but there's always a long and short to go with it.
Well, speaking of winning, and you said the word alpha just a moment ago, I'm curious.
I didn't mean to. That probably sounds snobby.
No. I'm curious, Jeff. Like Strauss, I've been following you for a while, and you've been ahead of some really big trends. And so I'm curious to you, and I realize that every investment opportunity is unique, and there's no one thing that works all the time. But in your eyes, what makes a fat pitch to you? Like when you see something happening in retail, whether it's something happening at the store level or at the website level, or you're seeing, teenagers walking around wearing this apparel, like what is it that like for you, you're like, oh, here's a fat pitch. I need to get involved.
Yeah.
I like people being super skeptical of it. I like people calling me really offensive names when I'm wearing pants that are more comfortable than they're wearing. Like that to me is great. We just talked about the Lulu example before, but and that can be on the upside or the downside. One of the best trades over the last year have been these post-COVID glamour companies that went up and then they kind of burst and then spent the last 3 years not dying. I was long Peloton for a long way on the way up, but stocks are not suicide packs. So I took a little while off that when it got to 250 or 240. It became a $50 billion company. They sell stationary bikes. What I'm looking for a fat pitch is something that company is still regarded as largely a joke, but they're going to be generating about $500 million of cash in the next couple of years. And it's now $2.5 billion, $3 billion enterprise value. And so all of a sudden you end up with something that you don't really need a trend on your side. You just need them to kind of exist. Stitch Fix is another company like that. Real. Chewy has been a company like that. These companies that didn't die, all of a sudden, I guess what they have in common, the through line, is that people didn't believe in them. And that's the advantage in the consumer space, is that you can extrapolate from sort of what people are believing and what they're rejecting, what they don't realize is a thing. The idea that Peloton is, just a bunch of people with hangers, I just hang my clothes on them. That's fine. And I'm sure that's true. But, that was more of a problem for the stock when it was $50 billion than when it's $2.5 billion. And it's still a joke and people are still laughing at it. And it's like, man, I know private equity. These guys have 3 million connected fitness subscribers that are paying $45 a month, and they're only generating churn at about 1.5%. That's a really good business, man. Give me $3 million customers that are sending me $50 a month. Holy crap.
Right.
Are we sure this is garbage? And so when I see that combination of people like either don't know that the trend is coming, as the case of Lulu men's pants, or they've given up for dead, and the company is still kind of plugging and chugging and just fundamentally a business that you'd want to own. To me, those are huge pitches. I don't mind people laughing at me. I'll be wrong. It's like 35% of the time, and that just is Lou Gehrig type of stuff. So that's just fine with me. It's those are just kind of the numbers you're looking up. Is again, the more skeptical people are, the trends go longer than people think on the upside when you get hot right now, which is what we're looking at with On. And a lot of times the companies that are giving up for dead, you got to be patient with them, but you can get long and just sort of wait for the numbers to overwhelm the skepticism.
Jeff, how much time are you spending going through earnings releases and digging through the financial statements?
Less now, because AI is super good at that, man.
Right? What do you use?
I use Claude. Claude is my analyst, and man, I can yell at Claude, and bitch at Claude, and what? He's still going to give you the relative numbers, and not perfect, but it's super fast, and that's analyst level type of stuff. Because you can ask you questions like, okay, tell me the growth rate, what's going on online, it's how are the margins versus last year, tell me the trend on their cash flow. I'm using it all the time in ways that I really wouldn't have before, and that's saved me just a ton of time. And so, it's a couple hours a day. It depends on how much you get new information. Another advantage of specializing in a particular group is, I'm not pretending that I can take every piece of incremental information every company reports and digest that in a way that's going to really add much value to my portfolio. I'm looking at kind of a specific group of companies and just trying to kind of find examples of within the theme that help inform my decisions.
Steve, he said something really important or interesting to me. You and I are not fundamental analysts, but when you were talking about, Jeff, how some of these retail companies that, they were the talk of the world, like Peloton, for a brief period of time. Everyone was talking about it. Everybody was buying them. Everybody was subscribing to their monthly services, whatnot. And then, the downside, right?
Sure.
The stock
people
falls.
got to go outside again, and it turns out they didn't want to spend all day in it, right? Their stationary bike, yeah.
But maybe we're not talking about that company anymore. But it still has retained, as you mentioned, a lot of customers who are still paying monthly. And these companies that are still quietly now, they're not the talk of the town, but they're still quietly generating lots of money. You have to believe that a company like that, for all of its arguably maybe bad decisions that led to the fall of the stock price, you got to imagine with all that money coming in, they're going to do something right eventually with that, because they have a lot of room for error at this point. And those can become great investment opportunities.
They really can. And the key is, as I said, it works backwards. Yeah, let's go. We'll go intergalactic level and work our way down. There are poets and quants in the world. There are people that think in terms of numbers right away, and people that need the story, that need the they work backwards and kind of need the visuals, need the stories. I'm much more naturally speaking, kind of the latter. I'm much more poetic in the way I'm looking at things, and so that's how I'm identifying the trends. That's how I'm looking at things, and then applying the numbers on top of that. And so again, I trust my own instincts in terms of whether a business like that is really left for dead, is really gone. It's Chewy's another one. America super likes pets.
Love them.
It's that company was just a really big bubble when it was like, oh, we're never going to go to a pet food store again. We're going to buy all our squeaky toys online now for the foreseeable future forever. Yeah, that was too much for Chewy, but that stock got up to $300 odd, and then it went down to 15. At 15, the people that have taken to getting their dog food delivered online and getting some of that pet care needs taken care of in a monthly way where they're not having to deal with it so much. That's a great business. That's an absolutely fantastic business that didn't go away. And just because it became a punchline for a joke, you got to be able to tell the difference between a Chewy and a Beyond Meat, which was another kind of fabulous COVID company that is just garbage, that actually you can put it all together by, if you offer your dog Beyond Meat products, it will not in fact eat the Beyond Meat products. Like I've done that test. My dogs will eat anything.
Wow.
If I'm putting it in my mouth, my dogs will absolutely eat anything. And you can hand them hey, want a sausage? And I'm like, dude.
You really did that back in the day?
Yes, I really did that.
Popular? That's
yes, I really did that. And sorted that company rather effectively. Not as much as I should. I should have ridden the damn thing to the grave. But it's the hottest thing on earth, and my dogs literally would not take a bite of it. And as it turns out, they're dogs. They'll eat anything I put in my mouth. It's like oh, num num, broken glass, num num num, and they'll take at least a sniff of it. They're just not interested.
That's really funny.
Hey Jeff, are there any retail companies that have either greatly surprised you in how successful they've been, or on the flip side, are there some that you can't believe they couldn't figure it out and they've just fallen apart? Any surprises?
In terms of consumer names, probably like it's the biggest disappointment, or the company that I felt was like so in front of it, is TiVo. Super old school,
right?
Super just holy shit. What we do a lot of is watch things on the time schedule we want. Like we do a lot of that culture. Yeah. I don't know about you guys, but the last time, who waits for the start time for any damn show?
I loved TiVo when it first came out.
It was amazing. It was fantastic. And it's like, this is clearly the future of consuming content, is we're going to time delay every damn thing that we watch. Like it's just going to be that's how that's going to work, whether it's in the box or it's with the cable company, wherever that digital content is living, I'm going to buy it. That this is how I'm going to be consuming it on my own schedule. And I'm going to be flipping through the commercials. And they had a cute little anthropomorphic boop, boop. You can still picture the little TiVo boxes.
And the remote. I remember the remote.
Yeah, the cute little remotes.
Nice. Right. Oh, that was great, man. It should have been huge. And so,
what happened to them?
Right.
What did they do wrong?
They got into the weeds with fighting the cable companies and the idea that they could be sort of, we were going to keep all our stuff on the hard drive, is ultimately what it came down to. And so the cable companies, the content distributors, just played the long game, and they realized first, our crappy cable boxes, remember the cable boxes you would have to rent, and it's like, geez, I can keep 6 movies on it. This is great.
You'd have to delete stuff.
Yeah. You'd have to delete stuff for space. That was just crazy, right? But they knew that eventually that would get better. And then finally you put that all in line and you had streaming take over. And TiVo didn't realize that, it's whatever form this takes. It's not about the box. It's not about our TiVo box. It's about the idea of time delay. We have to focus on that. We have to be, they should have been in bed with Netflix right from the start, just right from them. This is the same idea. Watch it when you want to. This is the product that you want. This is the content that you want, and you can put it on your own schedule, and that changes how you live your life. Man, you give me a company that it changes how people live their life. I want to be along. We're along a tongue of Uber, just because it's like, It's a verb. I Uber stuff. It's then you just you get long that because it changes everyone's life in a visual way, and then you go and figure out, okay, are these guys kind of sophisticated financial managers or are they idiots? I think they're pretty good managers. I think they're going to make money no matter what happens.
Dara K has been one of the best CEOs of the past 3-4 years. Is that fair to say? I mean, he's a master operator, is he not?
For sure. I mean, he seems to be great. And I'm a guy who, give me a good manager and let him go. Amazon missed, or they didn't miss. They said they're going to spend a lot of money. I wrote a piece for the site where we're saying I worry about Amazon when they don't have stuff to spend money on. Because this company came out with their S1 and said, we're going to spend money on every opportunity because we're going to build a brand. And they went out and did that from a bookstore to the world. That's what a talented manager can do. It's all about their allocating the capital. Is Uber going to figure out a way to get a piece of autonomous driving? Holy crap, yes, because they've got the best interface and they've got the app that I have in my pocket that I use when I want to get a car.
Yep. Yeah. Hold on, Sean. On this point, has there ever been a time where you love a company, you love the setup, you love the fundamentals, but the manager was so bad, it kept you out of it? Like is the manager, is leadership a deal breaker? And has that ever happened?
Yeah, leadership is for sure a deal breaker, for sure. And usually it's CEOs are like giraffes. They evolve too far to be kind of useful in the wild. They get those big long necks, and it's like, oh, that makes sense for the leaves. But geez, what if anything conceivably chases you? It seems like it's going to be an encumbrance to have a 14-foot neck. They just got to get into these little specific grooves. And some Starbucks is a great example. Does the leadership change there matter? Holy crap! Does the leadership change matter at Starbucks right now? It's
the stock moved.
We're not
like
the
crazy.
Nation's bathrooms. Does that seem like a super controversial stance for a CEO to take? We would prefer that like homeless people don't use our toilets as a place to kind of clean themselves. That would be amazing. That was something Starbucks debated for years. Wow. Years and no longer doing that. That's a huge improvement for that company. I love that stock. Dick's Sporting Goods, when we went into COVID, they were still in a situation where the present manager had a great guy, great CEO. They were taking guns out of stores. And rather than just say we're going to take guns out of stores and then we're just not going to sell guns anymore, they were doing it store by store. And it became just this thing that they were constantly talking about it, debating it endlessly, just kind of in this rut where you could tell it was a lifetime hunter who was wrestling with his soul. As an investor, I can see both sides of the debate, but I kind of don't give a crap. I just want the CEO who's going to make a call. I just want the guy who's going to put the company in the right direction. And let's see what happens. They come out of COVID. They don't care about that at all. They're all about, hey, we're giving you curbside delivery. America's changed the way it's shopped. The gun thing. What are you even talking about? That's just not. It's not something we're associated with. So, especially at a CEO level, my dad used to say, a CEO can stand for one, maybe two things, maybe.
Right.
But, it's what he wanted people to realize was if he was going to visit your store, you better be in tune with the planogram. You better be executing, and you sure as hell better be clean. And he would openly say, he's like, as I got older than 7 and after he drove the FU part into my head, it was like, became the lessons progressed. But when he would be unreasonable, he'd say, that seemed kind of harsh, but I know right now he's on the phone with the next store manager over saying, I just got torn a new butt by Macke. You better be clean. Like the store better be clean because he's out visiting stores. And if you're not looking high and tight, if you haven't had someone kind of gussy up the end caps and make sure you're in stock, you're going to have a psychotic guy with his kids in tow yelling at you in about the next 20 minutes. So maybe you should gussy things up. So I just cleaned 6 stores by yelling at one guy. I'm leveraging my time. It's basically the lesson. That's good management. Makes a difference.
One more on this, because we could have just done the whole show about you going around the stores with your dad, right, Sean?
Yeah.
There's probably a sitcom in it. Actually, it was a weird childhood.
But hold on, how big of a nerd were you at the time? Were you dreading going to the stores with your dad, or did you want to be there? Did you enjoy it?
I was all in. Absolutely. No, I was there.
You loved it.
I was for sure there. I was spending time with my dad. It's a kid.
When you were there, when you were going there, did you notice as a 7-year-old or 8 or 9, however old you were doing it during this period of time, did you get a sense that when you and your dad walked into the store that all the employees were walking on eggshells, they're all freaking out about you guys being there?
It became a thing, to be honest. Yeah. Childhood is weird, but he was a very upwardly mobile guy. He grew up in a tiny town. He was born on a kitchen table, and was CEO when he was 44 years old. So there was a lot of progression. When I was a little kid, no one cared. He was just a psycho, and I was just another guy who's at the store with his dad, who seems intense. As we grew up, it became it's the smart store managers who wanted to be upwardly mobile themselves. They kind of got onto the game a little bit, and so there was that feeling of here he comes. It's my brother went to CU in Boulder. My brother who just passed away.
That's where I live.
Yeah, it's so, man, that my brother going to CU is the best and worst thing that happened to the Target manager in that store, because we walk in and I remember we went in when my brother was a freshman. He was older, so we got to go kind of visit him when he went to college. But then I visited him in his sophomore year, and we walked in together, and the store manager came up and he's like, "Well, it's the Macke boys. How you guys doing?" At that point, we realized that the secret shopping missions that Dad was going on they were no longer secrets. They were more a touring type of event.
Well, my wife considers herself a little bit of a Target expert. Nothing like you, of course, Jeff, but we
love Target experts. It's great.
She's a Target expert. She shops there all the time. But I will say, she's very bearish on the Boulder Target location. She doesn't like it. Doesn't like the way it's laid out. It's too busy. The parking lot's cramped. She doesn't like it.
They've lost their mind.
Get out there.
Nah, I can't help it, man. It's not a suicide pact. I would love to be long Target. I feel like the world's a better place than I am. The company's a little lost right now. It's been spending a lot more time with Mom over the last few weeks. We still go to Targets, and man, it's however your wife feels about them, I guarantee my mom could go punch for punch with her. She has some thoughts on the Napa Target. She's more than happy to share.
Well, I will say on the flip side, the other Target that we go to that's further out of the suburbs, that's one we actually frequent more often. That one for my wife won extremely high marks during COVID, because that was the store out of all the stores around town. It was a super Target, right? So they do groceries there. They got on the curbside delivery faster than anybody, and they did it light years ahead and faster than everybody else in town. So we did a lot of grocery shopping at Target during COVID when we weren't going into stores.
You see, and that's an anecdote to you. To me, that's like 8 different stocks that you can make a trade off, because there's so much to kind of unpack. Target right now is lost because they're the most open of the discount stores, right? Yeah. Kind of Target, Costco, and Walmart, and the latter two have really pulled away from Target so much over the last couple of years, because Target doesn't know what it wants to be right now. They're the most wide open of the stores. And once you introduce that shrink level, once that becomes an actual real headwind that people are stealing stuff out of your stores, Target takes a lot of crap for complaining about it, but they've lost a couple basis points at least of margin, and you're talking about 7-8% margin businesses. And so when 1% of your margin is just walking out the front door of that store, you got to figure out a different way to sell things. And curbside's one answer, but again, I was in there today. I had to wait in line to get the AirPods I wanted, and then I bought razors for my just to shave, and they had to find the key for that, and so that's 15 minutes that I'm not really interested in spending while they unlock my razors and give me my AirPods. That's just crazy. It's a tough way to do business.
The pharmacies are this way too, and you literally can't go there. It's not even worth it unless you're going to go to like a local pharmacy, but you can't go to CVS and Walgreens anymore. Everything's locked up.
Right. And think about the pharmacies. It's intellectually kind of the way those stores work. When you go to a Target or a Walmart or anywhere else, it's as you wait in line, there's kind of the impulse items. Pharmacies are set up where the retail is just kind of a bunch of odds and ends crap for you to buy while you're waiting for your prescription to get picked up. Right. And so they figure, it's these people are probably sick, so we'll put cold meds kind of near the pharmacy and people can shop there. That works perfect until you have to lock up all the cold meds, because it's the guy who's there to get his script filled for his cough, and he's got a piercing headache. He's fantastic, man. That went from just a guy that Walgreens is going to make $50 off to a guy that Walgreens is going to super piss off because he has to have his own ID to get his freaking Tylenol if he can find someone to give him his Tylenol while he's waiting for his script. And the pharmacy is not kicking any money to the Walgreens because they're strapped themselves because they can't get the insurance paid. That entire model is dead. That entire model just went from terrible retail to like just this gulag service business where it's I can get a digital clock anywhere. Like I don't need my impulse items at a place where they lock them all up.
I think you're spot on. I'm annoyed every time I go there. And what happens is, as a consumer, but also as an investor, you start to feel a certain way. And that kind of brings me to this next question. The way that you're analyzing these stocks is very intimate. You're going to the store, you're trying the products, right? You're getting to know these businesses. Do you start to feel a certain way about them? Do you have favorites? And do you have to try to be mindful of that and not allow yourself to fall in love? Like, for example, you come from a Target family. How do you approach that in your investing?
You have to figure out what their mission is. We talked before about Black Friday being the time that you know what a store is trying to be for its customers. This is going to be what we're doing this holiday season. This is what we're trying to deliver, and you grade them off that, because I don't expect the same service at a Target that I would at a Saks, that I would at a Nordstrom, where if I'm going to go drop $1,500 on a sport coat, I want someone to kiss my butt a little bit. I know how to fit a suit. My first job after Dartmouth was I went to work at Macy's. And so I took my Ivy League degree and figured out a way to put shoes on men's feet, which was, that's a super intimate experience. I'll tell you what, Strauss, if you're sliding a shoe on a guy's foot, you know the guy a little bit, like you get to know each other a little bit. Yeah. They don't do that anymore. But as a result, I know how to fit shoes. I know how to try something on, and what you know from that is what people expect. If you're working at Macy's and you're doing shoes, you can't disappear for 20 minutes. If the guy says, I'm a size 12 in this, you can't walk into the storeroom and just be gone for a long time, which is what you happened at Foot Locker all the time. Like, right? It's a tough business. You have to have your inventory has to be high and tight at a shoe store, or you're going to be pissing off customers. And
the guy at Foot Locker, to be fair, he was just going out in the back to smoke a J and then
exactly. Here's your shoe. We had it in beige. Did you want beige?
But do you root for them, Jeff? You're obviously able to think objectively about all this stuff for Target, but at the end of the day, do you hope that they do well? I look at a chart like Nike and it breaks my heart. I want Nike to do well. I like Nike. And I feel like that's unique to consumer stocks, the way that investors think about them like that.
It is. And people want Nike to do well. That's what made Nike just my favorite short of the year last year for sure. Because there's that premium of people holy, you're Nike, for the love of God. It's an Olympic year and you're Nike. What are you doing? And then you listen to the conference call and you listen to the company and they're talking about how, we were everywhere in Paris. We were ubiquitous in Paris. And they're saying that as though it's a good thing, even as they're announcing a revenue miss. And it's holy crap. Imagine if you wouldn't have been ubiquitous in Paris. Would you have missed by more? What exactly are you doing here? They're ads in the Super Bowl. Yeah. I thought it was a really compelling ad about women's sports. And they're showing, and they got Caitlin Clark, and she's the one of the most famous athletes in the world, deservedly so. But I follow the company. And so I know that Nike's not going to be selling a Caitlin Clark shoe until at least 2026.
Yeah, so what are they doing?
And they're paying them for $10 million a year. They're putting in their commercials, and it's you guys should do is sell shoes. This would be a great opportunity to move some shoe product with all these young girls that you're pretending to celebrate because you're all about sports, but you're not making shoes for the young ladies who you're purporting to support so much, including Caitlin herself, who should be making $5 a pair of every Caitlin Clark Airs that she's selling. But for some reason, Nike still thinks that Michael Jordan is relevant with people my kids' age, which is, I'm sorry to say, not the case.
Oh, come on. Don't hate on Jordan. And Sean is going to buy the Caitlin Clark shoes when they come out.
I'm a fan.
Sean loves Caitlin Clark.
I'm definitely a fan.
They're going to move an unbelievable amount of Caitlin Clark product. And again, and you hear kind of the reasons why they're not doing that, because they've been making basketball shoes for quite a while. They like to pretend there's a lot of science there, but nah, not really. It's just design a shoe there, guys. You pay thousands of people to design shoes. I bet you can come out with one fast. It's political. It's silly. The reasons that don't make sense. And again, you get that the discordant feeling between what a company should be and what they're actually doing. I think Starbucks has turned the corner. I think Brian Nichols is a really good manager, and he's just good at things like we should serve people coffee within 4 minutes. What Nike needs is a CEO who says, we shouldn't run Caitlin Clark ads at the most expensive ad space in the history of the planet unless we have an actual product to sell that's related to Caitlin Clark. Like that would make a ton of sense for us to actually have a Caitlin Clark shoe if we're going to make the centerpiece of a $20 million ad spot, and that's before we actually even produce it. To be about her. Like we should sell product. And I'm not going to be long a company that doesn't have kind of that basic fundamental understanding of what the sweet God are we doing with our business model right here.
Well, Jeff, I can relate. The whole Michael Jordan thing. I coach my son's 5th grade basketball team, and in practice, when we're working drills and we're trying to get boys to buy into something, me and my assistant coach, oftentimes we accidentally drop a Michael Jordan reference, and then the kids look at us like, who are you talking about? Talk to me about Luka Doncic or, right. Anthony Davis or something like that. Don't talk to me about this guy I've never heard of.
And they don't realize it. Everyone stands on the shoulders of giants, right? I mean, we have generations of 3 generations removed from people watching Michael Jordan highlights and emulating them. And so my son just said to me just a few weeks ago, he's like, listen, there are like 50 guys that can do fancier dunks that come up with more clutch shots. And just because you're the sui generis of doing that type of thing, the way Jordan was, it doesn't last. And you sure as hell shouldn't build an entire athletic apparel line around that. Like if Nike was good at what they were doing, Lululemon really wouldn't exist, at least in the size it is now. Holy crap, you're Nike and you missed athletic tights? Because that seems like a trend that you guys should have probably been on. That seems like something, maybe the Air Jordan tights for women was just, maybe that was a problem with who you're associating the brand with. Maybe think bigger, guys.
Did Michael Jordan ink the greatest marketing deal in the history of sports marketing? I mean, isn't he still making like $5 for every Nike shoe that's getting sold these days?
He's making insane amounts of bank.
That's so awesome.
And that went from awesome Nostrawza to like, holy crap, Nike's just going to go down with a ship, because now he's kind of just like a 62-year-old guy who drinks a lot and is smoking cigars and giving people shit on every golf course you've ever been. He's the guy who's just like, You're going to miss the putt. You're going to miss the putt because I'm Michael Jordan. I bet you missed the fucking putt. Yeah. It's like, wow, you're a surly, scary man, and I don't like your fashion sense, so I'm not sure I want to buy your shit.
And he doesn't give 2 shits because he's collecting $1 million every night while he's sleeping.
So much bank, and just bankrupting all the other stars. Because what Michael Jordan's contract's a little different, because he's making $500 million a year just in pure cash flow, no matter what he does. And so it turns out you can hang out in Vegas a little longer than the rookie guy that you're going to be a mentor to. You can run that dude into the ground pretty easily with that cash flow.
I mean, how much are they really still paying him? It's still,
yeah, it's in
the hundreds of millions annually. Yeah.
Yes, it's in the hundreds of millions annually. It's a little murky. They would honestly do much better if the brand was more successful. And they hide behind it because Air Jordan is huge as a brand for them, but in terms of growth, in terms of cultural, do you guys want a Jumpman like on your golf shirts? I don't really. It doesn't add any value. Peloton still sells apparel, and the funny thing is about it, you can tell how bad that is, because you can buy. They do Lululemon stuff, and it's about a 30% discount. A buddy of mine and I, we buy all of our golf shirts through Peloton, because just that Peloton like logo, you get a discount on the exact same crap versus what you would spend at the Lulu store. So $125 shirts, like $70, just entirely because of the logo. There's a reverse value add there. It's a curious thing that happens in business sometimes. But I think Jordan is suspiciously close to that line right now.
Wow, that's crazy. Well, I'm going to go cry when we finish this podcast, because that's a bummer. I love Michael Jordan. I guess
we all do. The night that's why it would be nice. They're not Chuck Taylor isn't getting 50 cents on the dollar every time they sell a pair of Chuck Taylors. He was probably a great basketball player and a nice guy, but he played in 1920, and so they probably aren't kicking in money anymore. And maybe 40 years after they leave, maybe that's enough. Maybe Michael had a good run. I loved him too. He was fantastic. But the nicest thing to do, like a good old dog, sometimes you got to put him down.
Oh. Well, I
John,
don't think anyone's going to feel
Did
bad
that seem
for
harsh?
a little bit.
I don't think anyone's going to feel bad financially for Michael when this is all done. He's cashed in quite well.
Yeah, he's done well just on every level.
Yeah.
Sean, I wanted to, if you're ready to wrap, I was going to ask the question I like to ask to everybody.
Yeah, let's do it. Let's do it. We've already taken too much of Jeff's time. Jeff, you've been very generous. Thank you.
Oh, thank
Well,
you.
this has been it's been a really fun talk. Jeff, you're obviously so passionate about the research that you're doing and the analysis that you're doing on these companies. What is it that keeps you passionate about the work that you're doing after all these years?
I like being right. I like the stories, and I like kind of the human drama of it. And I think for me, if I can incorporate all that, I like knowing who the CEOs are. I like listening to the same people on the calls and kind of checking out their vibe, because I think that you can tell how the management teams are emotionally and how they're executing their lives. And that is a pretty good start for an investment thesis. So I'm passionate about that. And I'm passionate about sort of, just kind of watching the world around me. A little bit of a spectrum type of thing, they call it now, I guess, but it's just a certain sense of remove and a certain sense of this is how I engage with the world. And I've figured out a way to monetize it. And it's kind of just become something that I just do instinctively.
You know what I learned from our conversation today, which I already knew, but I don't think I've ever really thought about it like this. Consumer stocks are more fun.
There you go.
They are.
They're better stories, that's for sure.
Fun to trade. Yeah, we're actually buying these things. You know what I mean? It's not like some industrials. You don't know what the hell it is. Has no meaning or bearing on your life. Buying and selling Uber and Apple and all these brands that we're interacting with, day in and day out. I think it's more fun. I don't know.
They trade, they move, man. It's you don't think there are trades there long and short. Look at the makeup space over the last month. You can make some money short there. That's been a grim experience. The trade of getting long any shoemaker except Nike over the last year. Strauss, I tell you what, I like Nike as well. It takes the edge off to make a lot of money buying other brands when you realize that this one's not doing well. It's I would love Target to be doing well the way you would love Nike to be doing well. I root for the home team, but it makes me more money to be long Walmart and Costco.
Well, Steve, I love that you brought up the word fun, and this is a good way to wrap it up here. I think what Jeff brings to the team here, not only to us, but eventually to our audience, is that Jeff brings a unique perspective about retail in a fun way, in an engaging way, and a passion that you can tell. It oozes off the page and on video and every media appearance you make, Jeff. So we're excited to be doing things with you going forward, and I know that our audience is really going to resonate with the things that you're sharing and the insights that you bring and the money that we're all going to make off of the great insights that you're bringing to the table. So, Jeff, thanks for making the time to do this episode, and man, I'm looking forward to some great times ahead.
Yeah,
thanks,
my
Jeff.
pleasure, guys. My pleasure.
Well, that was fun.
Ton of fun. Like I said, I understand bank stocks and broker dealers. Like, I understand the fundamentals and the financial statements, but I don't enjoy looking into those companies or researching them. There's nothing fun about like diving in to the balance sheet of a bank. But Nike, Dick's Sports, any of these, consumer or retail stocks, it's just enjoyable to kind of talk about them, shoot the shit. Jeff has such deep knowledge about all these companies and businesses. This was a blast.
Yeah, I like, he's not your traditional fundamental analyst, right? He's digging into the stories and the background and the vibe, right? Like I think that's really cool the way he does it. And one regret that I didn't ask him about in the interview is I really wanted to talk about his artwork. His artwork is something else. And I wanted to ask, where did that all start? How does he even do it? Like, does he have like some kind of special device that he's drawing on? Like,
we forgot.
Big swing and a miss on my part. I apologize, everybody.
We'll have him come back. Sean, we could have asked him so much more. And you know what? This interview was a little bit different than the other ones because we were like talking about stocks. But guess what? I think that was the right thing to do. Because it's so fun to talk about all these different businesses. But it was a little bit more topical than usual.
And I meant it, man. Like, I'm excited he's going to be joining the team and doing stuff with us. And because he really brings a unique viewpoint that I find very interesting. I know a lot of our audience will find very interesting and profitable, I would expect. So that's really cool.
The way that Jeff approaches his analysis, really just thinks about these different stocks and businesses is truly unique. He's an expert in the space. Like I said, since he was just a kid walking around the Target stores with his dad. He just brings, I think, a special lens to this sector, which is one of the biggest, most important sectors. We're talking about consumer discretionary stocks, so we're gonna have a lot more conversations like this with Jeff in the future, I think.
Yeah, for sure. And we all interact with this space, and so there's going to be lots of more stories and really cool things to talk about down the road. All right, well, this was fun, Steve. Great job as always. Let's do it again soon.
Thanks, Sean. Bye, guys.